Hi everyone, let's go through my bullish and bearish Elliott Wave scenarios on the medium time frame and the low time frame on Bitcoin, including potential trading setups, starting with the more bearish scenario on the medium time frame, where we are looking for a wave A in a 5-wave structure, followed by a 3-wave structure in a WXY, before eventually more downside in an impulsive wave C, because this wave A is a 5-wave structure then to the downside, expecting then a 3-wave and another 5-wave move to the downside in an ABC zigzag corrective pattern. If you then look at the target area for this wave Y, what I think is very interesting is this target box over here, sitting between 30.2k and 30.4k. Now this is a target box, we haven't reached this yet. Price rejected before hitting the target box and a couple of more times. But now if price is continue moving to the upside, this is definitely an interesting area to keep your eye on, at least for a little bit of additional confluence. We have a daily over here, we have a weekly over here, and we also have the 1-to-1 for potentially a wave Y. And the 1-to-1, the trend-based fib extension, is taken from the low of A to the high of this W to the low of this wick over here, as this wick is the lowest structure in this potential wave X. So that is some interesting confluence for then potentially this trading setup over here to enter a short around the blue target box, stop loss at the very clear invalidation of 31k, and then looking for a move to the downside. The more safer option, of course, you have your own plan, your own strategy, but potentially a more safer option to trade this over here is not to just enter a short when price is pushing to the upside on volume, because you might get stopped out real quick, but see a little bit of a structure, a little bit of like resistance. You want to see some entry requirements maybe that you have, or a certain plan that you have developed to eventually enter the trade over here. And if you would use something like the CVD, for example, which I tend to use myself as well in my videos, and I like to show it as well, is that maybe one can create a high, then eventually create a lower high. So we have a lower high on price, higher high on the CVD, which is a bearish divergence. Then the entry would be over here for then a trade to the downside. That would be quite a safe option for potentially price reaching this area. Of course, as it stands right now, it still has a little bit to go, and it is weekend, and weekend tends to be a bit rangy, but you never know, because I think last weekend or 2 weekends ago, it was quite a volatile weekend. So we'll see what happens on Saturday and on Sunday. The more bullish scenario on the medium time frame is that this structure over here is a 3-wave structure and then a wave A, followed by a 3-wave structure in a wave B, before then an impulsive structure to the downside in a wave C. There is 2 reasons why this is an alternative scenario for me, and the other scenario with the resistance over here is currently preferred. It has to do with this wave A, and it has to do with this wave C. So first of all, this wave A counts a bit better as a 5-wave structure than a 3-wave structure, because if this is a 3-wave structure like this, the last leg, this wave C and then an ABC, this last leg over here is very, very extended and actually passes the 1.618 trend-based fib extension, which already is a maximum target for a wave C in a zigzag. And if I quickly put it on my chart over here, open my zigzag, there we go, zigzag Fibonacci pools, there you can see the 1.618, even though price is hanging around the 1.618 for a while, it is closing multiple 1-hour and higher time frame candles below the 1.618, which is not really something you like to see. Maybe this is a WXY, but then the 1.618 is still the max target, and yeah, price is ranging here, closing candles below, not really something that is preferred. And then if we look at this ABC over here, that this is a 5-wave structure followed by a 3, and then you want to see another impulsive move to the upside. Well, clearly you can see that if this is a wave C or part of a wave C, we are actually looking for a more impulsive move to the upside. And as it stands now, it has been ranging to the upside for a very long time. And usually a wave A and a wave C are quite similar to one another in time and in length. And of course now this wave C is much longer in time compared to this wave A. And also, in my opinion, it's not really impulsive enough for this to be a wave C. However, if price is gonna take the high over here at 31k, then the next area of resistance, at least whatever the count may be, of course, but the next area of resistance for me is gonna be this area around 32.4k. So at 32.4k, we have the 2022 range highs. So that means there's some liquidity resting above this level. People that went short in the past put their stop losses above the highs. So price might take that liquidity, maybe close below the 2022 range highs, for then an entry and a potential trade to the downside. So this would be then a swing failure pattern type of trading setup. where you want to see liquidity taken, close below, enter over here, and then downside to go. Of course, educational guys, this is YouTube, but this is an interesting area of resistance, stop loss safely above, and then eventually trading it to the downside. Now this, of course, then is an alternative scenario. Both the, let's say, bullish scenario, where a bit more upside is expected before down, as well as the bearish scenario over here, where we turn around a little bit earlier, have an interesting target, at least to the downside. So it's not necessarily a target per se. We have to wait how things are unfolding before we can get a clear idea of a potential target to the downside. But this yellow target box over here is definitely a target area of interest for me, which sits between 24,850 and 24.3k. And there's actually quite a lot of confluence. It's also an important area from the higher time frame. We have a daily naked point of control, weekly naked point of control, a daily time naked point of control, range. There's many different confluence, and also a support resistance area over here. And I do like to show you this. We can actually go to the daily time frame, and I now put on my target boxes again, where you can see price over here found resistance. Then we had a weekly or daily order block. And if price is going to return to this level over here might now act as support. So you might have a very simple resistance into support flip for then eventually a potential move to the upside. So this area is definitely interesting for potential long setups. But then again, one has to wait and see how price is going to evolve to the downside and what structure it's going to have, what volume it is going to have from an Elliott Wave point of view. And if we at least think ahead of potential targets to the downside based on the structure we have in front of us right now, so the WXY in a bigger ABC, we can take the trend-based fib extension from the high of A to the low of A to then the potential high over here of this wave Y, right? So let's put it in the target box for now at the 1-to-1, put on the wave C zigzag trend-based fib extensions, and then let's see if I put it on lock, because my chart is on lock at the moment. And then you can see the most common target area for a wave C is actually between the 1 and the 1.236. The rare target for a wave C is down here, the 1.618, which is below the yellow target box. So the yellow target box is at least inside the target area for a wave C, even though the more common target area is a bit above. However, if this wave A is some sort of a three-wave structure, and then this would be a WX and eventually a wave Y to the downside, then the 1.618 actually turns into a more common target for a wave Y. It's a bit more rare for a wave C, but a bit more common, therefore it's orange instead of gray for a wave Y. So yeah, that could be quite interesting, but of course we have to wait and see how price is going to go to the downside. And then I want to show you this. This is actually very interesting. This was found by Arya in the group. Actually, I think I have it in the group as well on Discord. So he was writing on Discord over here yesterday, last night, and he showed me this. And I was like, damn, that's actually very interesting, because of course price does not repeat, but it rhymes. And he showed me the bars pattern, laying it over the current price section, and I was like, wait, where did you actually found this? Because this is very interesting. So we had a little bit of a chat about what he found in this particular area, and he told me that basically where he got it from is the rise from 37.5k to 48k in the past. So if we actually go to the chart and show you this price action over here, which is really nicely overlaying the current price action. So I'm on the 1 hour, so I have to go to the left over here. We are looking at this structure. So this structure starting on the 14th of March 2022, and the high was made on the 28th of March 2022. And if we pull maybe a little bit of a channel over here, then oops, you can see it also channels pretty well. Like the price action we have at the moment is also channeling quite nicely to the upside. And this structure over here was also very difficult to count, this over here. So we currently have the same problem. It's moving to the upside in a bit of a range. It's not easy to count as well, but even though, you know, price doesn't repeat, it does rhyme. And if we then go to the bars pattern that comes from that piece of price action, so with the bars pattern over here, what you can do is you can take a piece of price action from the past and then eventually lay it over the current price action. And what you can see is it looks quite nice. It looks quite nice. So it does overlay price action quite nice indeed, ranging to the upside, eventually maybe getting a bit of a push to eventually put in a high for then a continuation to the downside. And if we combine this bars pattern with the scenario I just showed you, it becomes quite a nice little idea we have here, right? Where we are ranging to the upside. Maybe then eventually we get a bit of a push to the upside either this weekend or next week, that doesn't matter. We take the target box and take a bit of liquidity from the highs over here. We don't cross the invalidation at 31k for then eventually a move to the downside, maybe find resistance again at the target box, maybe some bearish divergences, right? Who knows? For then eventually continuation to the downside. I think that would be brilliant, very, very nice. Now, I think in this scenario with the more higher, it's stretching a little bit. So as you can see, you can move it around as well, but I have to move it around something like this and then maybe a bit more down. So it could work to go to the upside a bit further, but it's stretching a little bit. But nonetheless, both of the scenarios that I've shown can work with the bars pattern that I have on the chart over here, with this one then again being the more preferred scenario. So I think that, yeah, counting this over here on the low time frames becomes very, very complex. WXYXZ is a possibility, some sort of a bigger WXY, or it is maybe an ABC, like a 535 type of move. It's very, very complex on the lower time frame, so that's why it's also better to zoom out and stick on the higher time frames. But this is definitely something that is interesting. And then finally, the more and most bearish scenario is that, well, we're going to find more downside and not take these highs. It's a bit unlikely at the moment as we are ranging below the 886, and we also have bullish divergences between these lows, a higher low in price, but the CVD divergences had a lower low, so there's some absorption going on, and definitely an interesting target for that absorption. And the bigger players that absorb the shorts over here is going to be these highs, right? We have a double top, and the target for the divergences by itself is the high over there at about 30k. So the longer we are going to range around this 886, the more bullish it is. But in a more bearish scenario, you don't want to see this high taken, in this then being either a 5 or a 3 wave structure, then a corrective move to the upside, and then you want to see continuation to the downside. And if we go quickly to the 15-minute, because I've actually been looking at this morning, we had this push to the upside. Now this push to the upside can be counted as a 5 wave structure. Let's actually go to the 5-minute. So then you have a 1, 2, 1, 2, 3, 4, 5, 4, 5. So then you have a 1, 2, 3, 4, 5, right? Like a 5 wave move to the upside, followed by a 3, 3, and then a 5 wave move, which can be an expanding flat ABC structure, for then eventually a bit of continuation to the upside. So we have to wait and see how it develops, but this is what I'm currently seeing on the lower time frames, currently on the 5-15 minutes. And yeah, we'll see how the weekend evolves, right? Enjoy the weekend for sure. I hope this video was helpful or valuable to you. Please check out the macro and the high time frame video if you're interested. And for now, thanks for watching and subscribing, and I will see you at the next one. Bye bye.